Every crypto bear market sounds exactly the same. People start saying crypto is finished. They say XRP is dead. They claim Ripple has abandoned XRP. We've heard these headlines over and over again, and somehow they always appear when the market is under the most pressure. Fear becomes louder than facts, and short-term price action starts convincing people that the entire story is over. But if you step back for a moment, nature teaches us something completely different. The tide goes out, and then it comes back in. That's exactly how liquidity works in financial markets. Money doesn't disappear forever. It moves in cycles. Liquidity leaves risk assets, fear takes over, investors lose confidence, and eventually the cycle begins to reverse. We've seen this pattern repeat throughout financial history, and crypto has never been immune to it. The question isn't whether cycles exist. The question is whether you're able to recognize them while everyone else is focused on today's headlines. Now, that doesn't mean every digital asset will recover. I'm certainly not suggesting every meme coin or speculative token suddenly returns to its previous highs. Many projects were built almost entirely on hype, and when that hype disappears, there's very little left to support them. But projects built around real-world utility and growing institutional adoption are a completely different category. Those are the assets I'm paying attention to. Those are the assets I'm continuing to accumulate while market sentiment remains negative. Think about how we understand ocean tides. Today, we can predict almost the exact minute when low tide arrives and when high tide returns. Wouldn't it be incredible if investing worked exactly the same way? Imagine knowing the precise day Bitcoin reaches its bottom, the exact hour XRP prints its lowest price, and the exact moment liquidity starts flowing back into the crypto market. Unfortunately, investing doesn't work like that. Nobody consistently buys the absolute bottom. Nobody consistently sells the absolute top. The investors who succeed over the long run usually aren't trying to be perfect. Instead, they're trying to operate within the right range. That's the approach I prefer. It's similar to taking your family out during low tide. You don't have to arrive at the exact minute the tide reaches its lowest point. You simply need to arrive close enough to enjoy everything that's available before the water begins returning. Investing works much the same way. I don't believe anyone can perfectly time the market every single time. But I do believe investors can recognize when prices are entering an area that offers much better long-term value than they did months earlier. That's why I'm comfortable dollar cost averaging during periods like this instead of waiting for a perfect entry that may never come. Could prices still move lower? Absolutely. That's always possible during a bear market. And if that happens, it doesn't automatically invalidate the long-term thesis. It simply means the cycle hasn't fully played out yet. But here's where things start becoming even more important. The biggest risk I'm watching right now isn't coming from inside the crypto market itself. It's coming from the global macro environment. More specifically, what's happening in Japan? Because if liquidity continues tightening there, the impact could reach far beyond one country, and that's where this story takes a much more interesting turn. If you've been following global markets over the past couple of years, you probably remember what happened in August 2024. As the USD-JPY currency pair surged toward the 162 level, volatility spread across financial markets. Bitcoin experienced a sharp decline. XRP also came under heavy pressure, and investors were reminded that crypto doesn't exist in its own bubble. Global liquidity still has a major influence on digital assets. Now we're approaching that same area once again, and that's exactly why Japan is one of the biggest macro stories I'm watching right now. Despite multiple interventions from the Bank of Japan and the country's Ministry of Finance, the pressure on the currency hasn't completely disappeared. The market simply hasn't responded the way policymakers hoped. If that trend continues, another wave of liquidity could be pulled out of global markets. And when liquidity leaves, it doesn't only affect crypto. It can impact US stocks, treasury markets, commodities, and virtually every major risk asset around the world. That's why this isn't just a crypto story. It's a global liquidity story. Japan also remains one of the largest foreign holders of US treasuries. Any significant shift in its financial position has the potential to ripple through global markets, creating additional volatility while investors search for safety and cash. So yes, we have to be realistic. Could XRP still trade below $1? If another liquidity shock hits the market, absolutely. Could Bitcoin experience another leg lower before the next major cycle begins? That's also possible. No serious investor should completely rule out those scenarios, but here's where I think many people lose perspective. They're trying to predict the exact bottom instead of preparing for the next cycle. Those are two completely different mindsets. Personally, I'd rather build my position while fear remains high than wait until optimism returns and prices have already moved significantly higher. That's why I'm comfortable continuing to dollar cost average instead of trying to perfectly time every market swing. Because if history has taught us anything, it's that markets usually recover long before the majority of investors feel confident again. Now, there are still a few important risks we can't ignore. Geopolitical uncertainty continues to create hesitation across financial markets. At the same time, concerns surrounding Japan's financial system remain unresolved. Both of these factors have one thing in common: they create uncertainty, and uncertainty often reduces liquidity. That's exactly why crypto has struggled to build sustained momentum despite positive developments happening across the industry. But here's the encouraging part. Much of the excessive leverage that built up during previous market rallies has already been flushed out. That's actually a healthy reset. Today's challenge isn't simply speculative trading. The bigger challenge is the broader macro environment that's still absorbing liquidity across the global financial system, and that's why patience matters more than panic. Because once those macro pressures begin easing, liquidity doesn't slowly trickle back into markets. It often returns much faster than people expect. And when that happens, the strongest utility-driven digital assets are usually the first ones investors begin watching again. But that raises one final question. When liquidity finally returns, which assets will be in the best position to benefit from the next major cycle? So where does all of this leave us? For me, it comes back to one simple idea. Liquidity moves in cycles. Right now, we're in a period where global liquidity remains under pressure. Japan is facing challenges. Geopolitical uncertainty hasn't completely disappeared, and investors across every major market are still looking for safety. That's why risk assets, including crypto, continue to experience volatility. But cycles don't last forever. Just as the tide always returns, liquidity eventually finds its way back into the market. The difficult part isn't knowing that it will happen, it's having the patience to stay focused while everyone else is convinced it never will. That's why I'm paying far more attention to long-term utility than short-term price swings. Markets can stay volatile for weeks or even months, but projects that continue building real-world use cases and attracting institutional adoption are often the ones investors revisit when confidence returns. Could we see one more move lower before the next major cycle begins? Absolutely. That's a possibility every investor should be prepared for, but I'm not allowing short-term uncertainty to distract me from the bigger picture. My focus remains on where liquidity is likely to flow once macro conditions begin improving. Now, I'd love to hear your opinion. Do you think XRP has already found its bottom, or are you expecting one final shakeout before liquidity returns to the crypto market? Let me know your thoughts in the comments below. If you enjoyed this analysis, don't forget to like the video, subscribe to Ojian XRP Insights, and turn on notifications so you never miss the latest XRP news, institutional developments, and market analysis. Thanks for watching, and I'll see you in the next video.